Welcome back, everyone. Today, I'm going to talk about the Lennar Earnings Report. Really exciting report. I've listened to the D.R. Horton recently, the Toll Brothers, and now Lennar, all the big builders out there in the market. Lennar is positioned really well. And one of the big differentiators of this company is the technology adoption, right? And I talk in my other videos about Kathy Wood and uh, my admiration for her. And I do so because she has just a unique way about thinking about the market. One of the things she says is that companies that are adopting new technologies, that are investing in R&D, are really going to take off in the future. So, if I were a stock buyer and I'm looking at home developers who are crushing it right now, Lennar's got to be top of my list. They have a huge investment in Open Door. Open Door is going to change the game for iBuyers. They're doing digital title closings, reducing it down from 30 days to 20, and they're going just all digital, and they're making the right investments. D.R. Horton and Toll Brothers are not doing that. They're more of the standard builder, and so we'll see what that means long term. But the net of the earnings report, still great performance. There's still really strong demand. The confidence and the sentiment of the future is very high. They think that the millennial buyer will continue to form families, want to live in single family homes, and they're profiting from it. One thing I think it's important to note too is all these builders are building up a build to rent model. And I've been saying this for some time. This will be a trend to stay. They're making good margins here on these rental properties that are single families for families that can't own a property, can't afford it, but do want to live in a single family home. So net, what the report shows is that financially these companies are in a good spot. There's a lot of future demand for homes. They do see a strong market, even if the rates go up to 4.5%, 5%, as I predicted. I think they'll be in a good spot. Now, supply chain continues to be an issue. I have another video I'll put above about the lumber prices. Supply chain on lumber is a big issue, as is any sort of PVC piping or any of that. So something's will have to change there, and there is some relief in the futures market in terms of the commodities needed to build a home, but the relief is not substantial enough to offset the high price of materials. So I'm saying all this to you all because I think, again, when you think about prices of the market in real estate, it's not as simple as just saying supply and demand. While that is a huge factor, the supply piece is really brought on by current homeowners selling their properties, which we know is not happening, and two, home builders building enough inventory. And these are all indicators that tell us about the supply and demand curve of real estate. If builders were building substantial amount of inventory like they did back in 2008, you would have an oversupply risk. We don't have that. And again, we still don't think that's going to happen. And what's interesting about this report is that the builders have been slowing down their marketing listings, meaning they have the ability to sell probably, let's say 40 to 80 in 1 month. They're pulling it back to 15 to 25. And they're doing that to be able to monitor the cost increases of materials, right? So they don't want to sell homes, 9 months out at, let's say, $500,000 with a cost to build of $300,000, only for the cost to go to $400,000, and they make less margin. So they're only selling homes, that will be built in a matter of 4 to 6 months out versus what was once 9 to 12 months out. Again, I have a home that I'm building. I bought it in June of last year. It won't be done until March of 2022. That builder based his margins on cost probably from June through December. And he's now incurring the cost of higher lumber. So his margin is going to be squeezed substantially on my home, which frankly is concerning. And so the point is, the builder market is closely watching the commodity prices, and it's important for us to do the same thing because that will dictate the supply coming to the market. And I think we'll have a constraint in supply so long as all this is still the case. So, and again, check out my other video. I do talk about the risk of a 10% correction in real estate. Still think it's going to be a burst of appreciation in the near term, while affordability is still reasonable. Once affordability hits a ceiling, you're going to see a massive slowing of appreciation, probably to that 2 to 4% range, eventually a plateauing, and then potentially a correction of 10% in select markets. So Curious to know if you heard the report. It's out there for free. Check it out. Lennar's Earnings Report. Thanks, y'all.